Afternoon, everyone, and I believe I'm the last one presenting this afternoon, so hopefully I won't keep you away from anything that you've got to do afterwards. And it feels like there's quite a heavy atmosphere in the room. It's quite warm in here, so please try and stay awake at least for a few more minutes yet. So why is that going? Right, okay, so Cabot Energy. Well, you may know us from previously Northern Petroleum. We rebranded this summer, and I think that it's something that's been on our minds for a while to do that, but now feels like the right time to do it. And we've been out of the public light for a while and keeping the story a bit quiet because we've been slowly developing a production business in Canada whilst keeping hope with Italy that we can move that forward. So let's talk a little bit about where we are. So we're very much focused on production-led growth because I think that's very key in this environment and something that I've been used to throughout my career working in operations in production. I think that if you have your own revenue stream, something that's very important to our finance director, it means that you can go and do lots of things. It means we don't have to keep coming back to the market and looking for financing that way. But we also want to keep some real excitement within the business as well, because you can do your sustainable production growth, but a good exploration opportunity and a good appraisal opportunity provides something different for investors to look at, and hopefully we provide both ends of that spectrum. I think we have something we've focused on over the last couple of years is really keeping our G&A level down to a very low level, and that is something that is really of key focus to us, because we want to make sure that all of the money that we use goes into enhancing the production value that we have from our assets. So again, we're based in an office that's near Oval Tube Station now, quite close to Oval Cricket Ground actually, and it's a very good environment to grow a company. An oil and gas company in a high tech zone area is quite interesting to be, and I've probably raised the average age there quite a lot. I think we have a board that is extremely well known within the UK industry for building production businesses, both venture production and with Faro. I think that they understand where the market is, but looking for the petroleum engineering operations side of it as well. We have a strategic partner in High Power Petroleum that have come on board last year, and they are a 29.9% holder in the company, but they also provide extremely rigorous technical evaluation of what we've done, and getting their support I think very much shows where we are in terms of our technical expertise. So just moving on, why Canada? Why would you want to invest in Canada? I mean, the Canadians know how to do that, don't they? So why would anyone that's listed on the AIM market in London think that they can do any better than the Canadians out there? Well, you know what? We have something in Canada which has been almost forgotten about by the Canadians because they've moved on to the big plays, the Duvernay and the Montney, and we're working on fields that were discovered back in the 60s and 70s, put on production there, huge air volumes in place, and very low recovery factors. And it's a light oil. There's no requirement for any sort of hot water injection or anything like that. This is very easy production with infrastructure that exists. Another great thing about Canada, all the infrastructure's there, all the services are there, all the skills are there, and so we have an office based in Calgary that provides all the engineering skill that we need. This isn't a bunch of Brits going off and telling the Canadians that we know how to do things better. It's something that's been run by Canadians in our Calgary office. And we actually picked up acreage earlier on, which is the yellow block here, which are Virgo leases. We then picked up at the end of 2015 an asset from Chinook Energy, which was doing about 150 barrels a day at the time. Last year we averaged about 290 barrels a day from that asset with a very minimal investment of about $2 million. And it's really just working over old wells, bringing them back on production, very low risk, with low production rates but a long tail that provides us the background. We picked up 2 facilities in the transaction, probably when they were installed, $20 to $30 million each, provide access to the infrastructure for the national area, and it means it gives us the opportunity to develop our Virgo leases, which is where we first got in there. And that's something that we're starting to do now. So what have we done in Canada, and what have we done recently? And we put out an announcement today, which is the next phase. So we've gone through the workovers that we've made here, and we're now looking at drilling sidetracks to existing wells. And we drilled a sidetrack to our 6 and 5 well. We announced the results today. We kind of forecast that we come on production around 80 to 100 barrels a day. During the test phase that we've just completed, it was producing towards 700 barrels a day by the end of the test phase. Now we won't produce the well at that because we want to make sure that we don't damage the reservoir. So we'll produce 200 to 225 barrels a day from the one well, but that has a significant impact on our production rate. As of today, we're doing about 800 barrels a day from the gross from the assets, and that's something that we look to do at the exit rate for our summer work program. We've still got one more sidetrack to drill, which we'd like to start in December now, due to the freeze up, and we've got another well to bring online. So we're well on track to make our exit target rate. We have more of these to do, and this is the program that we're now starting on next year. So we're beyond the workovers now. We're moving into the phase where we're going to drill more sidetracks, and then we're looking at new wells beyond that. It's relatively low capital cost, so you can drill a sidetrack for $1 million Canadian, and you can get it if it's tied into the infrastructure. It comes straight on. Otherwise, you can put it on a single well battery. So pretty straightforward. And with the ambition to grow the production base here, to double it by the end of next year, so to 1,600 to 2,000 barrels a day, and then get up to 5,000 barrels a day in 2 to 3 years. Something that should be relatively straightforward to achieve. But you don't want to forget about Italy, because Italy is high risk exploration, very high reward. And we have a couple of opportunities there, both in Cascina and Alberto, which is operated on our behalf by Shell, who are 80% owner, and farmed into a license that we were awarded a month after we were awarded it. They had all the data on the license because they had the data before from Enterprise. They liked it that much, they came straight into it, and they're now going through a process of acquiring seismic and then drilling a well, for which we're carried for to a large extent. So something that we'll keep watching going through, but something that we want to repeat on our Southern Adriatic assets, which is Cygnus and Giove, where we potentially have a 1 billion barrel prospect in Cygnus, and is as we contend, the Aquila field, which has been on production there for a number of years now, since the late 90s, has been still producing 4,000 or 5,000 barrels a day from a couple of wells. We contend it's just an extension. The Aquila field is an extension of our prospect. Something that we'll acquire some 3D seismic on next year, and go through the mapping process for that. So very exciting. What's more, we recognise that Italy moves at a different pace to Canada and is much slower. You need to do that. So we want to go through the process of making sure we've got production there as well, which is where our Cabot asset sits, which was an acquisition from Rockhopper earlier this year. 130 BOE a day at the moment, and very good high margin gas production. We'd look to replicate that and continue to do that onshore Italy. So ultimately, we've been very quiet over the last couple of years. We've been building a position where we've got some solid foundations, where we've got the costs to where we want them to be, and we can actually grow a production company with the risk reward E&A at the end of it, and grow to something that's very material over the next 2 to 3 years. So if you have the chance, please come and see us. We're in booth 4 over there over the next remainder of today and tomorrow, and thank you for your attention.
Thank you. Round of applause, please.